I don't know. Let's do this. Get the opening bell.
Oh man, today is gonna be an interesting day because we just had some data come out and I think it just potentially caused a flip-flop in how markets are responding. This is really bizarre. So buckle up for this because I want you to think for a moment. Don't look at what the market is doing right now, although you probably already have, and I want you to think to yourself. If I told you what I'm about to tell you, what do you think the market would ordinarily do, okay? So, ordinarily, what would happen if Europe was afraid of inflation, American retail sales came in way stronger than expected, and inflation numbers, both CPI and PPI, came in stronger than expected? Based on your experience over the last 2 years, what would happen? Well, generally what would happen is everything would tank. The stock market would tank, bond yields would skyrocket, and everybody would be freaking out about how much more the Federal Reserve has to raise rates. And now, something really bizarre is happening. And of course, the day has just started, so we don't know. But we do know that the data is out. And I'll tell you, there is something weird going on. You ready for this? First, buckle up for the data. Stagnation crisis in Europe. Europe, naturally, raises rates again, as expected. About 67% chance that Europe was going to raise rates another quarter BP, and that's exactly what they did. American retail sales, the survey was a 1% increase. We got a 0.6% increase. Now, a lot of that could have had to do with natural gas and gasoline and energy expenses, but that's okay because we have this category here that says retail sales X auto and gas. We were actually expecting negative 0.1. So in other words, a shrinkage of, auto and gas and all, retail sales excluding auto and gas. And we actually got an increase of 0.2. So we beat by 0.3%. Retail sales control group expecting negative 0.1. We got 0.1. Then we got initial jobless claims where we were looking for 225,000 people to file for unemployment. And no, we only got 220,000. So in other words, stronger retail sales, better jobs numbers, continuing claims also coming in 2,000 less than expected, although the revision was about 5,000 hotter, so call that neutral. Then we get PPI, producer price inflation, which some people are like, I don't know, man, PPI, that comes in high, that, is eventually going to lead to, CPI coming in hot. So, we got to be careful over here, right? Okay, fine. So what do we get? PPI final demand expected to be 0.4. We get 0.7. PPI X food and energy, we do get a match at 0.2, but PPI X food, energy, and trade also comes in hot at 0.3, which is your core in PPI. Even the year-over-year number X of food, energy, and trade comes in at 3% versus 2.7%. Okay, all of this ordinarily, and this is what is absolutely insane, okay? I had to get myself the Sari Brew Potion out, mostly because I got a lot of crap going on because we just got word from FINRA and from the SEC on House Hack, my real estate startup. We got a ton of emails for the real estate coupon expiring tomorrow, the financial advice we're doing, and I gotta leave right now to go on a big mission. Oh my gosh. Anyway, the point is, I'm like frazzled because I got so much stuff going on just in these next few days. And here I am getting what is ordinarily bad data, right? The last basically 2 years. When we get data like this, we're like, oh, damn, we screwed, son. But instead, what's actually happening? And this is what is bizarre. Well, what's actually happening is the following. All of the indices are green. Oil is green. Treasury yields on the 10-year are basically flat. And if I go to the 2-year yield, Treasury yields are actually negative. So in other words, the 10-year is kind of slipping up a little bit and the 2 years coming down a little bit, which is sort of in the direction of uninverting the yield curve, which this is like, wait a minute, this is like good news is turning into good news. Dare I say that? But it's not just that. Listen to some of this. So Nick T shared some delicious juicy and delicious commentary from the Walmart CEO, which we've known this. We read the earnings calls at all the companies. We do this in our course member lives as well. Merchandise prices are lower than a year ago. But don't hold your breath on declines in food or groceries. So in other words, the Walmart CEO is like, yeah, there's deflation happening now relative to last year, which is obviously still substantially more expensive than it was pre-COVID. But you actually have deflation, according to the CEO of Walmart. But he says, don't hold your breath on groceries. It felt to me like because of inflation, things were going to be tougher this year than they had been. It feels like, though, because of employment, wages, and some disinflation, things are kind of hanging in there, says the CEO of Walmart. But beyond that, listen to this. 12-month core goods CPI is literally where it was before the pandemic. And the curve of housing disinflation on both a 12-month and 3-month curve is just finally starting to roll over. And much of that is still ahead of us. That's why now people are thinking, okay, the Federal Reserve is going to still hold in September. In fact, Nick D says this doesn't change anything for December. Although the jury's still out for November and December, we're still not convinced we need to raise again. But then you have more economists now talking about grocery prices because rightfully so, people are pissed off that groceries are still so expensive. And I've kind of been pounding my fist on the table regularly going, hey man, look, they ain't coming down again. And people are like, what do you mean it's not coming down? Like, grocery prices, they have to come down. It's not fair. Like, Jerome Powell, he's got to fight for us, right? No, he doesn't. He's not fighting for you, okay? We just have to be clear about that. And he's not going to come rescue you. But what's fascinating is an economist looks at grocery prices, which in 2023 are basically flat, but compared to 2019 are still up like 17, 18%. And economists realize that wait a minute, we've actually never had declines in grocery prices from today going all the way back to like 1950. So in other words, we have not ever seen grocery prices go down in the last 3/4 of a century. So no, grocery prices probably are not going to go down. But will they stop going up? Hopefully. Okay, fine. So now we're caught up on this. What is this critical shift? Well, I mean, you should know what it is by now, but I do want to also quickly remind us what the Fed terminal rate is. Because remember, the Fed terminal rate and how much we're pricing into that Fed terminal rate, like we explained yesterday, I personally am paying a lot of attention to this number, and it actually fell. It fell this morning after the data, okay? Yesterday after hot CPI, the number was sitting at 5.46. Now, 5.439. Basically 5.44. It fell 2 basis points. The odds of another hike at all, in other words, basically the market took 2 basis points and was like, yeah, no, after this data, we're good with a cap. We're there. We're at peak. I think what's actually happening with my dragon chain body over here, I think what's actually happening is markets are finally flipping. They're finally saying, damn, all right, look, we were expecting inflation to come skyrocketing again and the economy to go into a recession, but it's time to roll and throw in the towel because inflation's not skyrocketing. Look, is it perfect? Is it immaculately going to zero? No. But is it so bad that we're going to get Paul Volckered into a recession? No. All right, maybe it's time to go long stonks then. Who knows? That, I think, is why we are seeing this unpricing of high yields. Although we are, well, I shouldn't really say unpricing of high yields. I should say stability. But I think the unpricing of the 210 is starting to happen. The 210 is obviously the yield curve. We're at 73 basis points to the negative side. Still pretty dang negative, but it's interesting because in the last few weeks, data has come in hotter than expected, including inflation data coming in hotter than expected. But rather than going deeper into reversion and a likelihood of recession, we're actually going out of reversion. We're trending in that direction. Yields feel like they've hit a ceiling. Oil prices are skyrocketing. And despite oil prices skyrocketing, you have a Fed that's like, yeah, we might be done. Yeah, we're probably done. Like, what? It is the opposite of what we've been experiencing for the last 2 years. And that's something to keep in mind. Like, clearly, that is a style of a flip here. For 2 years, every bit of good news was bad news, and I'm about to say it. Now, all of a sudden, good news and even some slight bad news, like some slight misses, is good, turning into good news. Now, knock on wood, I don't know if that'll last, but think about what I just said for a moment. Good news is good news again, and even some bad news is like, well, that's not that bad. And then things go, what? Today is the first day. I mean, obviously, we've been talking about the Nike swoosh, you know this, for almost a year now, where it's like, look, I think people are slowly going to price in that inflation's going to go away, that it's going to end up being transitory. If you said that a year ago, you ended up getting punched in the face. If you say it today, people are like, yeah, okay, it makes sense. I don't know, man. I still think there's going to be a recession, but yeah, okay, I think inflation's going to go away. You know, that's like the attitude has massively changed. But beyond the attitude massively changing, it's crystal clear that the way the market is behaving today on worse CPI data yesterday, worse PPI data, worse retail sales data, well, better retail sales data. So in other words, a beat on eco data, but a miss on where we wanted on the inflation data. The fact that all of that is leading the market to actually go green. I mean, the Nasdaq's up at the time of this recording, 44 basis points. Tesla's up over 0.5%. I mean, everything on my chart is green. Enphase is green. Okay, look, Enphase is green. Between you, myself, and, you know, the Dragon Median helmet right there, that's all you need to know. Like, that stock is never green. What? Anyway. Check out the coupon code, link down below. It expires tomorrow. I got stuff to do. I'll see you later.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.